All right. My name's Shannon Ochiltree. Oh, I'm
Hang on
sorry.
just a second, Shannon. That's okay. Hey, everyone. Welcome to the Knoxville Business Show. And we are excited to have episode 5. And with us, we have Shannon. Is it Ochiltree?
Ochiltree.
Ochiltree. That's just not a name that you see every day, Shannon. So we are excited to have you with us. Shannon is with the Mortgage Investors Group, and she is a senior loan officer with MIG. And we're so happy to have you on the show today, Shannon. So welcome.
Thank you. Thank you for having me.
Oh, it's a pleasure, really and truly. So Shannon, we're going to be streaming here. I'm going to share this on a couple of different sites. We're streaming live on YouTube and on Facebook. But one of the things that the viewers are going to know is tell us a little bit about Shannon.
All right. Well, I'm from Oak Ridge, Tennessee. I've been with Mortgage Investors Group for almost 30 years now. They were open right at a year when I joined them. And I've worked throughout the company, worked in many different parts of the industry, all with Mortgage Investors Group, and been a loan originator now for about 20 years. So love it, love what I do. And I managed to get into the business. I lucked into waiting on Chrissy Ray down at Lakeside Grill here in Oak Ridge, down on the water. And she was my customer one evening, and she said, "I need you to come work for me. I love your personality. I love how you handle yourself, and I want you to come work for me." And I kind of laughed it off and called her about 48 hours later and said, "Were you serious?" And she said, "Yes." And I went to work for her, and I've been there ever since. So
that's really cool. And that was 20 years ago?
Right at almost 30 years ago. Yes, sir.
Oh, wow.
Yep.
Yeah, that's super cool. And so you and I we have a mutual acquaintance with Kim Monroe. She, we were talking the other night. We were doing a live video, and I think we were really just kind of doing a business Q&A the other night. And a gentleman hopped on, and he said, "Hey, I am renting right now in Maryville, and I'm really looking to buy a home. And can someone help me find a home?" And of course, my advice to him was, "Yes, that's awesome. We can. But you really need to find someone like Shannon."
Mm-hmm.
That's kind of number one step. So that's what I've had multiple requests for people to say, can you get, a loan officer on and just talk about if I'm interested in buying a home, whether it's a first time buyer or maybe an experienced buyer, but certainly a first time buyer, what's some of the things that they need to be looking at, like kind of step one? Where do you go?
I mean, step one for your customer would be to, hand them however many business cards you're required to hand them. But, highly recommend they call a loan officer with a reputable mortgage company and go ahead and get pre-approved before you ever start spending a bunch of time with them. We probably, 75, 80% of the first-time home buyers that we talk to qualify. And so sometimes they may be hesitant to call because they're worried about their credit or their income or something along those lines. And we can help them, ease their concerns about that by pulling credit, analyzing the credit, figuring out what we can recommend they do to qualify if it's not now, on down the road. So, I think the first step is to have them give us a call, because we can plug them into the right loan program that they qualify for, review their income docs to make sure they're within the income limits for the program, and just get them set up for success so that you're not spinning your wheels showing them houses, for days on end, and them not be ready to do that.
Yeah. And we get that quite frequently. We get, people come in and they know they want a new house. They know they want to get out of the rental cycle, but they really don't know where to start, where to go first. And it sounds like what you're saying is you got to find a loan officer, and let's take a look at potentially what you qualify for.
That's right.
That's kind of step one.
Mm-hmm.
So understanding that, is there a general kind of timeline that you would recommend someone, is it start planning it now for a 6-month purchase, or is it just simply let's come on in and kind of see where you're at?
I think it's come on in, see where you're at so you can get a game plan together. The last thing you want is this little first time home buyer going out there falling in love with their dream home. And, you've shown it to them twice. Well, they need to get pre-qualified, and then we break their heart. They can't qualify right now. So if we go ahead and pre-qualify them and review their information now, and they aren't ready, then we can guide them step by step on exactly what they have to do or what not to do so that they can qualify in 30 days, 60 days, or 6 months down the road.
Yeah. And I think that's important because it's kind of expectation management, probably.
Mm-hmm.
Understanding, qualification, because, there's really no need going looking at a $500,000 home if you're in that $250,000 price range.
Right.
Exactly. That's kind of what you're saying.
Yes, sir.
Well, that's, I don't think people fully understand how important that is because, and hey, we just bought a home, I don't know, 6 months ago. And, we had to kind of start with that same process.
Right.
Like we felt like we knew what we qualified for, but we wasn't exactly sure.
Right.
So,
right. I have clients call me and I pull credit and they thought their scores were at 740 or 780 and they're at 658. That's a difference between a 3.5% interest rate and a 4 3/4 rate. Or qualifying or not qualifying. So, it's better to know now rather than be surprised when you're already under contract, gone through your home inspection and realize you do not qualify, to buy that home.
Yeah. So that leads me to my next question, and it's about interest rates.
Mm-hmm.
And, obviously the easy question is, Shannon, can you talk to us about what kind of rates are right now? But really, if you have the knowledge, and if you don't, that's okay. But talk to us a little bit about how mortgage rates vary and why is it a good time now and why is it not? But kind of talk to us a little bit about what some of the environmental factors that come into play with that.
Well, rates for purchase money loans vary a little bit compared to refinance. So if someone's looking to refinance right now, it may or may not make sense depending on where their current rate is. Purchase money loans, the interest rates are staying fairly flat. And what I mean by that is they're not, going from 2.5 to 5 on a daily basis. So they're varying by 1/8 to 1/4%, daily or every few days. And right now, to purchase money loans are very competitive. The rates are wonderful. First-time home buyer loans right now, we can do a first-time home buyer THDA FHA loan at 4%. It's a 30-year fixed. Rates at, 100% loan at 4% is not bad. It's very competitive. And then, 100% rural housing loans are down in the high 3s, low 4s, depending on their credit score. So, for anybody to be worried that now's not the time to buy, that's not the case. 80% of my pipelines purchase loans right now.
Wow. So you're saying, I guess what you're saying there is right now you're seeing successful transactions happen and people are happy with the rates that they're getting based off even the COVID-19.
Absolutely.
And that's one of the reasons that we wanted to have you on today is how has the COVID-19 affected the lending industry? Have you seen adjustments and kind of what are you seeing from your perspective?
Absolutely. We've had, within the last month, we're doing FHA loans at a credit score of 580. Our minimum score requirement bumped from 580 to 640, in a 1 week time frame. The market the investors are afraid. Everybody tightened up. And so did Mortgage Investors Group followed suit along with most of our competitors. Since then, that's lightened back down to a 640 credit score. So the market does not have an appetite for the higher risk loan programs. So we're no longer, at the moment, our rehab loans have been suspended. We're no longer doing manufactured homes unless it's a THDA FHA loan. And credit scores below 640. So, we had to go through and pull our pipelines on everybody we pre-qualified from 580 to 640 and call them and say, hold up, don't spend any more time looking at homes because by the time everything loosens back up, that home will be gone anyway. So it's been a little bit of a scary time, but things have calmed back down. Interest rates went high there for about a week or so, and they've calmed back down. So everybody's calming back down a little bit.
Wow, that's cool. Guys, it's Knoxville Business Show. We're with Shannon with MIG right now, and we're talking today is April the 22nd, 2020. Shannon, this video is going to be online forever. And 5 years from now, people will watch this video. And guys, right now we are right in dead center in the middle of what we're calling COVID-19. And Shannon is talking to us a little bit about how rates have been kind of fluctuating back and forth. Shannon, one of the things that I would like to talk to you a little bit about is that lock-in period, right? The lock-in period is ever so important that with finding that home. And what is kind of a general rule of thumb if you have to lock in that rate? Is it like a 30-day window? Can you talk to us a little bit about that?
Yes, sir. In previous times, we were locking purchase money loans in for 30 days and closing them in 30 days or less. Mortgage Investors Group focuses highly on our purchase business because we have our realtor partners out there, and that we want to make sure we accomplish the goals that they've put in place and put in their sellers and their buyers' minds as far as that goes. So purchase money business is our main focus, and we're locking those in right now. We're giving ourselves an extra 10 days. So we're locking them in for 40 days, still closing them usually within 30, as long as everybody's on top of their game and getting us what we need, responding to us, moving through the home inspection negotiation process fairly quickly. So, again, 30 to 40 days on purchases. Refinances, we're locking in for 45 days.
Wow. Shannon, let me ask you this. If we have viewers now, we've been up to 14, there's people watching us live right now. If we have a viewer that maybe knows that their credit's not exactly where they want it to be, they know they've got a little bit of work to do, is there some sort of like checklist that they could reach out to you and you could kind of give them, like, here's some of the things you need to be doing, make sure your bank account has this? Is there something like that they could reach out to you?
Absolutely. Absolutely. I mean, they can call me, email me, however they want to reach out to me. And, I could kind of pick their brains, ask them a few questions, figure out where they stand right now, and give them a good idea of what they can do to improve their credit scores, ask them some questions about what type of debt they have right now. Do they have 5 credit cards that are maxed out? Do they have a bankruptcy that's less than 2 years old? And I can guide them and give them kind of an estimated time frame as to when they would qualify. Obviously, I can't issue a pre-approval letter to someone based on a conversation. Before we can put our name and company name on that letter to go out and start making offers on homes, we do have to pull credit.
Yeah, no, and that's very important information. I think right now what you're saying is kind of preparation is key, and understanding. I've got a personal question that I'd like to know. Is there a difference between a pre-approval letter, and I've heard tons of different other slang terms for a letter that you're approved, like a fully approved? Is there different variations of types of, basically you're pre-approved or you're fully approved? Can you talk to me about that?
Yes. So when you receive a pre-approval letter from Mortgage Investors, I don't want to speak for all the loan officers in the company, but from me or somebody in my branch, we have spoken to the client. We have asked them a slew of questions, all the things that have caught us in the past. We ask all those questions. We, put all that information into our system. We run an automated underwriting approval through Fannie or Freddie, and we confirm that they're within the income limits for the program. If there are income limits, pull credit, analyze that, make sure there's nothing there that's going to scare us off or scare the underwriter. And that's when we, at that point, issue a pre-approval letter. Now, if that person is a W-2 employee, they're paid by the hour. For an employer who takes taxes out, we do the calculation to confirm their income is where it needs to be. If you've got someone that's self-employed, that files income tax returns as self-employed, we would not issue a pre-approval letter without reviewing those tax returns and confirming that the income is where it needs to be. So normally, if it's a cookie cutter deal, we issue a pre-approval letter as soon as we review credit, ask all the questions, run the automated approval. If it's a little shaky, I'm going to request that client send me their W-2s, their tax returns, their bank statements, their pay stubs, and I'm going to review all that to make sure there's nothing there that's going to put us in a bind, halfway through the transaction.
Yeah, and guys, listen to that. You can replay this video. It'll be saved online. What Shannon just gave you is the secret sauce, right? To make it easy because let's just face it, sometimes, home buying is already a very emotional event. You're about to make the largest purchase that you generally are going to make in your entire life. people get nervous and they want to feel like that they are in somewhat of a control. And many times when you're buying, sometimes you feel like you're out of control. And it's within, the powers of the home buying gods.
Right.
But the fact of the matter is, the things that you just described, I think, can make people feel more at ease based off preparedness level.
That's correct.
And so here's another one that we hear quite frequently. I'd like to hear your reaction. Is, so you're fully approved now. You got your pre-approval letter. You're out house hunting. Is it okay now that you can go buy a new vehicle and open up some credit card accounts and make some large purchases? Kind of, what's your rule of thumb on that?
Absolutely not. If your car breaks down and you're going to need to go buy a new car, you call your loan officer, talk to them, confirm that it's not going to cause a debt to income ratio or cause, your credit scores to go down if your credit report's about to expire. Say you've been shopping for a home for 120 days and you've still not found anything. Credit's good for 120 days, and then we have to close on a loan before that 120th day. If we don't, we would have to repull credit. So if you've gone out and bought a car or paid your credit card late or been out on airport motor miles shopping for a car and they pulled your credit 30 times, that could pull your scores down. So it's very important to, once you're pre-approved, not to change your profile, whether it's employment, income, credit, leave everything alone, get into a house, close on it, then do whatever it is you need to do as far as buying a new car or a camper or a boat or whatever it is you're interested in.
Yeah, and I think that goes back to the preparation, right? Mm-hmm. If you're prepared and you know that you're going to be buying a home this summer, then if there's even an inclination that you're going to be buying a vehicle, maybe we need to hold off on one of those.
Right. That's correct. That's correct. And one thing I do with my clients, I set them up on a what's called a drip campaign. So I pre-approve them, and then they go into a database that automatically starts sending them little updates periodically throughout the week. Hey, don't forget, do not open up any new, credit. If you've lost your job, please contact your loan officer, things like that. So we stay in touch with them and send them little reminders so that they know what not to do.
Gotcha. Yeah, drip campaign, that's a marketing term. So I like it.
Oh, yeah.
Yeah, I love it. That's kind of what I do here too, is I do all of our marketing. So that's really cool. Okay. This is awesome. I mean, I feel like this can help, because today it's just about helping people, right? And certainly there are a ton of loan officers out in the country, in East Tennessee. And I can't thank you enough, because, not once have you ever said, Jason, can I get some leads from this? You just was like, hey, yeah, I'll be happy to hop on here and just talk about it. So we've got your LinkedIn profile that we can pop. We've got your Facebook page, that you have a very impressive Facebook page. I love it.
Thank you.
If someone is kind of in the process, and let me ask you this, is maybe someone already has a loan officer that they're working with, but for whatever reason, it's just the relationship's not there. Because, Shannon, I say this quite frequently, people don't hire companies, they go and they hire people, right? So maybe for whatever reason, they're just not clicking with their loan officer. Is it taboo to leave that loan officer and call you? How does that kind of work?
Well, so I got to be careful here, but it's one of those things where if you're not comfortable with the loan officer you're working with, there's nothing wrong with you checking with someone else to see if what that company's offering, how they're treating you, if all that seems to sound okay to that new loan officer you're talking to. Mortgage Investors Group as a whole, we're not into stealing deals from each other. So if you have a client that is working with a loan officer with another branch, I'm going to reach out to that loan officer, talk to them. We're going to get a game plan together to figure out the best way to keep that client and keep them from going to another company and making them happy. So, but there is nothing wrong with, if you've gone on to one of our competitors' websites or on one of their apps and applied and you're pre-approved and you're just not quite comfortable because you can't talk to them, you can't text them, you can't, find them on Facebook or find them on LinkedIn because they're with a big box company, so there's nothing wrong with reaching out. And
yeah, like getting a second opinion, maybe with a doctor. If you're going to the doctor and you want to get a second opinion. Yeah. because we do that all the time in our industry, in the auction world and in the real estate world. We as a matter of fact, we recommend people go get another opinion and talk to them, and then we just kind of share the differences between us and maybe another company. So
Right.
no, that's really cool, because again, how many homes do people on average normally buy? It's not that many.
Right.
You do this every single day. So to a lot of people, it's like a foreign, crazy process, and they're afraid someone's, they're not going to get a good deal or whatever the case may be. So I'm hearing a lot of preparation stuff for you from you, making sure people are educated.
That's correct.
This is so cool. Shannon, thank you so much for being on. If there's a couple of thoughts that you'd like to leave people, I want to kind of keep this at 30 minutes. I know you're a very busy lady, so I don't want to keep you very long, but is there anything that you want to leave people with, like where you see the industry maybe moving to, or any kind of closing remarks?
Closing remarks would be the industry, like I said, the purchase business out there, it's very, very strong. If you've got sellers that are hesitant to put their house on the market because of the COVID situation, that's so untrue. I mean, the houses are getting, same day offers, multiple offers, same day listings are just within a few days. It's amazing how busy this industry is right now. And if you've been turned down by another lender and they did not guide you on what to do to eventually qualify, my advice would be to reach out to me or someone else within Mortgage Investors Group, because we will guide you and help you and get you in a spot at some point, whether it's 30 days from now or 6 months from now, to where you will end up qualifying and being able to become a homeowner.
Yeah, that's awesome. I mean, we have referred a lot of business your guys' way. With the auctions, it's a little bit unique, because it's, when I say sold, it's yours.
Right.
It's not contingent upon financing. So we want to make sure that they're good to go, because we don't want to see anybody lose an earnest deposit.
Right.
Whenever they submit it. So guys, thanks so much for being here. Shannon, thank you so much again. We appreciate you for being here. Folks, if you have questions for Shannon, again, this will be posted on the Knoxville Business Show's page. Please go ahead and respond anytime. Shannon, you can feel free to respond to those questions at any moment over the next 2-3 weeks if anybody pops any questions.
Okay.
And we've got your contact information scrolling, and let us know if we can ever help. Thanks again so much.
Thank you for having me.
Yeah.
Have a good day.